Hello, and thanks for joining us today. I'm super excited you could be here because today we're talking about the key strategies you really need to know to create long-term wealth with real estate. So maybe you're just trying to break into real estate investing. Maybe you're already doing it right now. And to have this conversation, either way, I brought the foremost expert on what's going on, where we're going, and on really how to tap into this the right way to create significant wealth for you in your life. And this is Jason Hartman. So Jason is actually a successful real estate investor, entrepreneur, and educator with a proven track record in his industry, having been involved in thousands of different real estate transactions and owning properties across 11 different states and 17 cities. He has created the complete solution for real estate investors, which is a comprehensive system that provides investors with education, resources, and tools to be informed and make great decisions and build wealth. Now, Jason began his career at 19 while still in college, quickly becoming one of the top 1% of realtors in the United States. He went on to purchase and expand in Irvine, California brokerage, which was later acquired by Coldwell Banker. Now, today, as CEO of Empowered Investor and Real Estate Tools, he helps investors identify and acquire income properties in the best U.S. markets using the area agnostic approach. Now, through his Creating Wealth podcast and educational events, Jason has empowered hundreds of thousands of people worldwide, sharing insights on financial literacy, real estate investment, and personal empowerment as well. He is passionate about breaking the cycle of financial dependence and helping others achieve financial freedom through smart real estate strategies. Jason, welcome back.
Hey, thanks, Ty. It's good to be here.
Yeah, it's good seeing you, man. It's been a while since we've seen each other. I know you're down hanging out in Miami right now, and I appreciate you making time to talk to us.
Yeah, my pleasure. I do keep up with you on Facebook, though.
I appreciate it. Yeah, we don't see each other as much, but it's still good. That's what's nice about social media is we still get a chance to catch up with what each other are doing. So, what do you
Yep.
think? You have a big audience that you teach. What are some of where do you kind of get on the starting point of building wealth with real estate? What do you think is one of the points that keeps people back? Because we all know real estate's a great way to build wealth. So many people don't do it. What do you find is a barrier with people starting to use real estate as a tool to build wealth?
I think the biggest barrier is really the mindset of the person who is the potential investor, who wants to build wealth. And I find that the biggest hurdle, the biggest setback for most people is they keep trying to time the market. And, there are always reasons at any time in history, in every asset class, there are always reasons to go for it and reasons you might not want to go for it. But what people need to realize, Ty, is that income property is the most historically proven asset class in the entire world. And, trying to time it is just really a fool's errand. There are so many doomers out there, and those people, those doomers, have the highest ratings. If you listen to Peter Schiff, if you listen to any one of a number of doomers, right, they have the big audience because the human mind is trained to hone in on negativity. And that was a survival mechanism for, eons before our discussion today, because we lived before the Industrial Revolution in an era of scarcity. And when the Industrial Revolution came along, it created an era of abundance. And then the information revolution came after that. And, now I guess you could even argue we're in the AI revolution, which is also information, but kind of a new variety of it. And, we live in a truly abundant world. And it is something that people just need to understand. They need to overcome their own psychology. That is the biggest issue. That's the biggest hurdle. And also, they need to realize that income property, unlike most investments, is a multi-dimensional asset class. So in most investments, the whole game is buy low, sell high, right? End of discussion. Whether it be precious metals, non-dividend paying stocks, cryptocurrencies, that's the game. And then some, if it, say, a dividend paying stock, it's buy low, sell high, get some dividends in between, right? But income property has at least 6 dimensions to it. And so you make your money in a lot of different ways, and you can adjust your strategy depending on the type of market you're in.
You are one of, if not the most well-renowned educators in this space to investors. So what are some of the core principles that you're teaching your students when they're kind of going down this because there's a lot of options, like just asset classes within real estate investing itself. There's so many options. I think it's almost overwhelmed. So what are some of the core principles that you're teaching your tribe?
Yeah, so we like single family homes. That's our favorite. But I would broaden that a little bit to say just housing in general. Obviously, apartments have been pretty tough the last few years. A lot of people got in sort of over their head with apartment complexes and so forth. But I think they've probably bottomed out or they're close to bottoming out in terms of that market. Obviously, the office market is absolutely terrible. That we've all heard about that because of the remote working era. We just like housing because at the end of the day, housing cannot be outsourced. If you need office space and you run a call center, you can move that call center to anywhere in the world. And certainly companies have done that. So that lessens the need for office space. Shopping or retail property use can be outsourced to the internet, and it has been for a couple of decades now, lessening the need for retail properties. And so we've seen, shopping centers go through a really tough time. But at the end of the day, everybody needs a place to sleep. They need a home and that's why housing is my absolute favorite asset class. Now, there are many ways to approach it, and we teach a lot of strategies on my podcast and on my YouTube channel. One is inflation-induced debt destruction, which is like this hidden wealth creator. I trademarked that term many years ago, and that's made me rather famous. I created a methodology to mitigate risk called the Hartman Risk Evaluator, which is based on what I call the LTI ratio. We've all heard, Ty, of the LTV ratio, the loan to value ratio, but this is the land to improvement ratio. And it's a way that people can really mitigate downside risk when looking at a real estate deal. And, all sorts of things, standardizing data, how to read a pro forma, why you should use one specific pro forma and not deviate from it. So you've standardized your data and you're much less likely to make mistakes that way.
Tell me a little bit more about LTI, because I think that that's something that people are really looking at is can they get into real estate investing while minimizing the risk?
Yeah, so about 20 years ago, when I was first becoming a nationwide investor, before that, I had lived in Southern California most of my life, and I was just investing locally. But what I didn't know about Southern California is that I was basically speculating. We divide the country and the world into three types of markets: linear markets, cyclical markets, and hybrid markets. And so the markets that get all the attention are the cyclical markets. And maybe I illustrate it this way. If you're looking at a chart with appreciation or depreciation over time, you'll have a cyclical market which will have glorious highs and really ugly lows. It's like a roller coaster, that chart. Okay. A linear market, though, is pretty smooth. It has very small highs and lows, and it just has that upward progression. And what I'm talking about here is appreciation or depreciation. A hybrid market, as the name would imply, is in between the two. So, what markets are cyclical? Well, the markets that get all the attention are cyclical. They are places like the West Coast of the United States, the expensive Northeastern markets: New York, Washington, D.C., Boston, South Florida, where I'm from, and where you're not exactly South Florida, but close. And so South Florida, very cyclical market, glorious highs, ugly lows, okay? And high land values and low or bad cash flow. So we like linear markets. This is most of the country. What Hillary Clinton years ago affectionately called, I'm joking, not affectionately, but the flyover states, right? That's most of the country, and most of the world is a linear market. These markets are in Arkansas, Tennessee, some Florida markets. Some Florida markets are linear. In Georgia, in Texas, these are markets that are just pretty reliable. They have a slow, kind of boring upward trajectory in their pricing. And it really comes down to kind of the old fable of the tortoise and the hare, right? The hare is that cyclical market that gets all the attention because there's a lot happening there. That's why the media pays attention to it. There's more to report. There's a bigger story because there are ups and downs. But the linear markets tend to be much better investment markets. Around the world, this is also true, Ty. So if you look at the flagship cities of the world, whether they be Paris, Hong Kong, Dubai, places like this, these are all cyclical markets and they all have very high land value. So when you buy a property, you're really buying two components. You're buying the land and you're buying the house or the structure, the apartment complex or whatever is built on the land. That's the improvement. So LTI means land to improvement. And what you want, the ideal equation here to limit downside risk, and what the Hartman risk evaluator teaches, is to invest in markets with very low land values because those are more stable. And you want high improvement value as a ratio to the land. Okay. So all of these expensive flagship markets have high land values. Cyclical markets are always characterized by that.
So give me an example of one that has that would be high or good to invest in on this LTI scale.
Yeah, so Memphis, Tennessee would be a great example. Indianapolis, Indiana would be another great example, right? These are markets where if you're looking at say a $200,000 property, or really, I should adjust my prices, $300,000 property. Okay, about 80% of the value of that deal is going to be improvement value, and only about 20% will be land value. So on that $300,000 property, that lot without a house on it would be about $60,000, give or take. And the house, the structure, the improvement would be the rest of it. Now, why is land volatile and improvement not so volatile? That's a very fair question to ask oneself. And the reason is because the ingredients of a house, so I'm in a hotel room right now, right? But if you look behind me, okay, the ingredients will be drywall, glass, steel. In the hotel, well, yeah, we got some lumber. The baseboards are lumber. This is a steel building. It's a high rise. But we've got those things. We've got concrete. We've got copper wire in the walls. We've got lots of petroleum products and the cost of energy and labor. Okay. And so these things, these commodities are traded globally. They're not attached to any one currency. You can, it doesn't matter if money or currency didn't even exist. People would still need them. The whole world needs them because they need shelter. And they have intrinsic value, right? A piece of wood is worth something, even if the dollar didn't exist or the yen didn't exist or the euro didn't exist. It's an asset that has intrinsic value because people just need it. And so that's why it's very stable when you invest mostly in improvement value rather than land value.
So when you've identified that you want to be in kind of a linear type market, there's so many options available around the country. So I'm sure one of the most common questions that your tribe asks you in the beginning is like, how do I even know what area to invest in?
Yeah. Well, maybe this will sound like shameless self-promotion, but if you go to jasonhartman.com and you click on the properties page, you're going to see the areas we like and the areas we're recommending at any given time. And those do change, by the way, because markets change. They're very dynamic, and we're always looking at different markets, looking for better opportunities. And some of these markets appreciate, frankly, too much. And then they start to get into the hybrid segment, and we have to keep adjusting our strategy a little bit. But yeah, that's where you can see the markets we like at any given time. So if you check that, if you go to jasonhartman.com and click on the properties page today, you will see in a year from now, you'll see different markets. Okay, I mean, some of them will remain the same, but there will be some different markets as well.
And I like it because not only do you list the properties, you even list the factors that really make it like one of the most desired properties. So if you haven't already, make sure you go to jasonhartman.com and then you can clearly see on the right-hand side, you can click the menu and be able to get to the properties page.
Yeah, and then also, Ty, each of those properties has a full pro forma with it. And one of the things I said earlier is you've got to, as an investor, you've got to standardize your data. Standardize, standardize, standardize. Because so many people are using spreadsheets and using this thing and that thing. And look, you've got to just decide that you're going to use one type of pro forma. You're going to learn how to understand that pro forma, and you're not going to deviate from it. So if anyone brings you a deal or any deal you find, you put it into the same software. And I've been doing that for 21 years. I liked it so much, I actually bought the company. Okay. So this was a software company called Property Tracker. And basically, I bought it and I made it free. Okay, so you can just go to propertytracker.com, create a free account. It's totally free to use, and you can do these performers yourself. It takes about 5 minutes or less. You know, once you get the hang of it, you can do one in 3 minutes. It's just super easy. You put a few data points in on the property, the mortgage, the financing, and your expectations of the future in terms of appreciation, vacancy rate, things like that, repair costs, maintenance costs, and you will get a projection as to how that property will perform in virtually every aspect.
Jason, if somebody's just getting launched, it can be overwhelming. There's so many things to do, nodes, tools, resources. You don't even know where to kind of go or what to do first. What do you do first? If somebody's just getting into real estate investing, what are some of the first steps they should take, the first things to consider to get launched?
Well, first they've got to see what they've got going on money wise, right? And what is their credit like? What is their money like? Now, your company can help people get down payment money, property improvement money, and so forth. And so that's great. But understand one's financial situation, certainly. Then decide that you're going to invest in conservative linear markets that have good cash flow and good return on investment. Maybe go to my website and watch one 30-minute video on how to analyze a real estate deal, how to read a pro forma. And it's on that same pro forma that I just told you about. Get the free software and just be your own best advisor, right? Rather than relying on somebody else, just learn how to analyze deals so that you don't make a mistake. The most common mistake people make after the first one we started off with, which is not doing anything. That's the biggest mistake. Okay. That's the biggest mistake anybody makes. But the second biggest mistake people make is that they buy a property based on some big future expectation, usually of appreciation. And that is a fool's errand. Okay. Yeah. A lot of people lose money that way. Nothing extraordinary should have to happen for you to make a good return on investment. And that's why we just take this very conservative path where every month, every year, people are making a nice return on their investment rather than, waiting for something great to happen that may never happen.
So you talked about the investment side, and I think money in money to invest is something that's always on people's mind. What are some of the best ways you recommend for somebody to get money to invest? What are the ones you like right now? What kind of loans? You like DSCR? I heard somebody was talking about 203K loans the other day. Like what are you seeing that you like the most that you're recommending to your tribe?
Well, once you figured out how much you have for a down payment, the best financing, far and away, is the common, popular, conventional financing that is essentially backed up by the government. It's the Fannie Mae, Freddie Mac financing. Could also be FHA or VA, but you're not going to be able to do investor stuff with that. You can kind of house hack if you're really just getting started and move into one of those properties for a while and then turn them into a rental property. Okay. But the best financing far and away is the Fannie Mae, Freddie Mac conventional financing. After that, you only are allowed to have 10 of those loans. Now, if you're married, each spouse could have 10. But after that, a lot of our clients that are building, nice sized portfolios, they will go with DSCR loans, which means debt service coverage ratio, by the way, where the qualifying for the mortgage is based much more on the property than the person. okay? The DSCR, just making sure those numbers look good. And on the propertytracker.com software, it shows the debt coverage ratio. So you can instantly know whether you can get a DSCR loan, okay? And so after your first 10, for one person or two if you're married, then you can go ahead and get DSCR loans, commercial financing. There's, of course, hard money, but it's very expensive. There are other creative financing options. There's no way we could cover all this in our brief time together. There's like an unlimited number of things you can do, really.
No, that's great. I mean, I think you gave us a where to start, where to go to from there. Well, what about properties? What about use of properties? I mean, there's so many things. I can fix and flip. I can buy and hold. I can put it in a long-term rental. I could do a short-term rental. Like, how do you help your tribe decide which one of those paths to choose?
Well, there's a spectrum on the passivity or activity of an investment. Okay, and the things you mentioned, whether they be Airbnb, short-term rentals, or fix and flip, or you didn't mention, but wholesaling or any of these things, these are all more businesses than they are investments. Okay. My company, Empowered Investor, we help people invest in real estate. Okay. If you want to go into the business of real estate and you've got a lot of time, or you don't have a day job, then you can go into the business of real estate and you can gain an additional profit by just basically going down the food chain and doing the things that someone would have done before you bought a turnkey property. So you could fix it up and do the BRRRR strategy, or you could fix it and flip it, or you could go, send thousands of mailers per month, or make a whole bunch of phone calls, or knock on doors and get wholesale deals. Or there's just so many things you can do in real estate. It's an amazing industry, it really is. But what my company does is we help people buy turnkey properties nationwide in different markets that we've researched from teams that we recommend.
If I'm coming into you, we hear a lot about passive income. We hear a lot about cash flowing properties. Then we hear a lot about appreciation. What do you recommend? Like, what am I looking for? If I come to you to invest, then am I really looking for something that's going to cash flow and create that passive income? Am I looking for something that maybe has a better chance of rapid appreciation? Maybe am I looking for something that does both?
Yeah. Well, appreciation is historically very unreliable, and very few people are good at predicting whether it'll happen or not. So, for my money, I would say you look for a property that just simply makes sense and gives you a nice return on investment every single year. Okay, where you can get very good returns, and you can see these all in the properties page at jasonhartman.com, looking at the performance. If appreciation happens, it's the icing on the cake. If a lot of appreciation happens, it's more icing on the cake. But again, it's not very reliable to project big appreciation rates. I mean, most experts will agree that the standard appreciation rate over decades is about 6% per year, give or take. Okay, if you're expecting anything more than that to happen, you're more of a speculator or a gambler than an investor. And the other thing I'll just say about that, because you mentioned passive income, there is, in my opinion, no such thing as a passive investment. If anyone is promoting a passive investment, they're lying to you. I mean, literally, even a savings account is not a passive investment, okay? Because you're getting attacked by inflation and taxation, and banks change their policies. They escheat your money to the government if you don't have activity in the account. They close, they go out of business. Like, all of these things have happened to me. And I'm thinking, wasn't this supposed to be just a passive investment? Precious metals, I had some precious metals in a safe deposit box, or a couple of them, right? The bank says, we're closing this branch. You have to move your stuff out of your safe deposit box by a certain date. And, that safe deposit box was in another state that I used to live in. And so now I have to literally fly there. pack my suitcase up with gold and silver and platinum and palladium, which is extremely dangerous, all right, to be carrying that stuff because someone could kill you and take it, and then move it to another bank. There is nothing is passive. There's no such thing as a passive investment. Everything requires attention unless you want to lose money. Passive investments, lose money with them, sure.
So
Then
outside
they're
of
passive.
passive investments and major appreciation, what are some of the other misconceptions that you think your students have when they come to you that you have to work through to help them become successful?
I think the biggest one is just timing the market. That is the one that just kills so many investors. They surf around YouTube, they see all these doomers that get tons of huge ratings who are just making these leaps in logic about the market. Look, the fact is there is a major housing shortage, and it doesn't look like it's going to be solved anytime soon. Okay. We have about 140 million properties in the country. We have about 700,000 of them that are actually for sale right now, which is a very low number. Only about 0.5% of the housing stock is for sale, whereas usually there's about 1%, about double what we have for sale. And it's amazing that that's true because interest rates have had such a massive increase, just such a historically high increase in interest rates, yet the market has still appreciated. Where a lot of these, what I'll call crash bros and doomers, they've been saying, oh, the real estate market's going to crash. The complete opposite happened. And look, if you listen to them, you missed out. Okay. And you're just going to keep missing out. You got to get in the game. That's where the money is made, being in the game, not being a spectator. And that's the biggest mistake I see people make. They talk themselves out of it because they listen to the wrong advice, and they don't really think it through in detail in terms of what's really going on and what the dynamics of the marketplace are.
Yeah, it's interesting. We just came through, not to get politics, we just had a recent election. And I think we've learned from these pollsters being so wrong,
Yeah.
like that maybe we should trust these experts' advice. But speaking of the recent election, so what are your thoughts of the future? Like what do you foresee happening here in the years to come with the real estate market?
Well, if Kamala would have won, or Trump, and Trump did win, obviously, but that didn't wouldn't really change things that much in terms of real estate. Okay, overall, the same strategy would apply. Get in the game. Okay, but one of the really beneficial things about income property investing is when there's inflation. And either way, there's going to be inflation. Okay. Trump is likely to deregulate things, which is great news. That'll mean more business, more home building. That's good, right? From a business perspective, for sure. But he's also likely to place tariffs on things, which will make them more expensive. And a lot of those raw materials I mentioned earlier, the ingredients of the house, those doorknobs, those hinges, the plumbing, the pieces of plumbing, faucets, so forth. A lot of the stuff's made in China, and it's going to have big tariffs on it. It's going to get a lot more expensive. Okay, but ultimately, that's going to be good for the U.S., I think, in the long run, because it's going to make more U.S. jobs here. It's going to be more beneficial to set up a company to make these parts in the U.S. rather than making them in China or wherever they make them. Right? They're made all over the world, and so that's one thing. But either way, we've got $35 trillion in terms of national debt. We've got unfunded entitlements that go into the future that are, some estimates say they're $220 trillion. The size of the entire US economy is, what is it now, about $28 trillion every year, I believe, the GDP of the country. And, basically that means you would have to, the whole country would have to take no income, pay 100% tax rate for like 10 years to solve the problem. It's not going to happen. The deficits and the unfunded mandates will continue even under Trump. Okay, Trump is a good businessman. I think he's much better for the country than the alternative. No question. I'm very happy that he won, and it seems like most of America is as well. But either way, it's going to be a great time to invest in real estate because there's going to be lots of inflationary pressure, and there's a very significant housing shortage.
Jason, I always love talking to you. It seems like our 30 minutes fly by really quick. And then that's why I need to keep bringing you back on because there's so many things we could dive into. There's a lot of people here that are in real estate investing, want to break in. They need someone like you as a mentor. I mean, you're the guy in the country that basically helps people break in and really succeed in the space. So, where can everybody go that's watching this and listening to this go to be able to dive in and be able to get more insight, more resources, more help from you?
Yeah, thanks, Ty. So my podcast is called The Creating Wealth Show. So just look up Jason Hartman on any podcast platform. You can find me on YouTube. Just type Jason Hartman. And then my main website is just jasonhartman.com. And I'm on the other platforms too. Instagram, I get a lot of engagement on Instagram, which is Jason Hartman and the number one. And Twitter or X as well, Jason Hartman ROI there for return on investment. So you can find me in all these places.
Sounds good. Thanks for joining me today, Jason.
Happy investing.
All right, so listen, if you're watching this, I mean, you have to go to jasonhartman.com because if you go to jasonhartman.com, what you find is a treasure trove of resources. I mean, not only can you link to everything that you want to link to, especially on the bottom of the page where you can access the social media links, but you also can even find like a resources section and you can look at his properties to be able to find available properties, the performers that we discussed today, the areas that you want to really consider buying, and in the properties you want to consider buying. But he's even got a resources tab that has, I mean, everything you could think about, from calculators to articles to blog posts to everything else you would need resources to actually be able to be successful. His blog is there. You're able to. I'm not sure, Jason. Can you access the podcast from your website, jasonhartman.com?
Yeah, you can, sure,
Oh, you
but
can.
it's better through a podcast platform because then you get the updates and so forth. But
Right. So
sure.
you want to make sure you look for his podcast on the podcasting platforms. It's a better way to go. But you also can access the blog, the podcast, more information about him, all of these resources, properties to invest in, everything. It is a good starting point for you. And then from there, you want to take a next step to talk to Jason. Jason's got a fantastic tribe of people that he's helping actually succeed in this space. And as we all know, like, you're going to get better results, faster results if you're working with an expert than trying to figure all this out on your own. And there's a lot to figure out. So make sure you get started at jasonhartman.com. There's more than abundance of resources you'll probably find anywhere else to help you actually succeed in the game of real estate investing. So thank you very much for tuning in. Make sure you check out jasonhartman.com. Take care. Have a great day.